Take a look at this. Stock futures are slightly up this morning after a major sell-off yesterday. The Dow lost almost 900 points. The Nasdaq was down more than 700, and the S&P 500 lost 155 points. In general, investors are uneasy due to the tariff war, and President Trump has refused to rule out a recession spurred by his trade policies. But what does all this mean for us? Take a look at this. It's Jill Schlesinger, our CBS News business analyst, to help us understand if we should make any moves as a result. And Jill, I know you always advise for people to financially plan for the long term and avoid knee-jerk reactions. So how worried should viewers be about what we've witnessed this week?
Look, I think it's unnerving. And I think what you pointed out, which is there's this general sense of uncertainty that is pervading the economy and markets. And so it's silly for me to say, hey, don't panic. But what I would really encourage you to do is, instead of worrying about where your money is invested in your retirement account, which is money you probably won't need for decades in the future, I would instead take a deep breath and say, what can I control? I can control my own financial life. I can make sure I've got an emergency reserve fund that's built up for 6 to 12 months of my living expenses. If that's done, I can chip away at my debt. Maybe if that really looks good and I feel confident that, I've got my basics done, maybe I actually increase my contribution to my retirement account, or take that big tax refund and use some of it to fund a IRA or a Roth IRA. These are the things that will actually make a big difference in your real life, regardless of which direction the stock market moves in the next day, week, or even months ahead. This is a long-term gain. Unfortunately, when you want to play the game of being an investor, I say game, it's sort of in a pithy way, but when you're an investor, the price of admission means you've got to endure some of these real gut-wrenching periods.
That's right, Jill. And it is a game to some extent when people take the risk of putting their money elsewhere on the possible likelihood that it will increase in value. So I know that you've given some great long-term advice there. There are some that might be closer to retirement, though. Is it clear which stocks were hit the hardest by this fluctuation? Do we often see that being the case when the trend is this large?
Well, think about this, that the stocks, the companies that have advanced the most are usually the ones that fall the furthest. So look at the technology sector. Yesterday, the Nasdaq had its worst day since September, down 4% in one day. And of that Nasdaq, you've heard about the Magnificent Seven, those large tech companies that were able to shoot higher over the last couple of years. Those were the stocks that really took it on the chin, led by Tesla, which was actually down 15% yesterday for lots of reasons. But you look at all those together and you say, you know what? This is a moment in time. These stocks still have gained tremendous ground over the last couple of years. So, you mentioned something that I think is important. Hey, what about these people who are nearing retirement, or even someone who just started investing and is freaking out? Even if you are just nearing retirement, if you're 60 years old and you say, hey, I'm just 5 years away, you still are investing for the long term. Why? Because your money has to last decades in the future. So even those who are close to the end of their work lives, they still need to invest so that they can make a higher rate of return than the inflation rate is eating away. That's the whole point of investing, gang. Right. It's not to just have fun, and it's not not a game, but it is to grow your money faster than the rate of inflation is growing. That's it.
And what I'm picking up on you saying, Jill, is that if you are investing and you're a part of the market, then don't sit still. There are things you can investigate and research as far as investing somewhere that beats inflation that will help you in the long term. There are things you can do.
Yeah, can I just say that you can be really lazy, which is great. Being a lazy investor is amazing. All you need to do is really look at the account that you have. And if you're in your retirement account, you put some money in a stock index fund and some money in a bond index fund and go to sleep at night. And you don't have to find the best stock, because guess what? Stock picking is really hard. And there has been very little evidence that anybody can pick stocks that consistently beat an index against which those stocks are measured. So you don't have to be a genius. You don't have to be Warren Buffett. You have to save money, get it to work, put it in low-cost index funds, and go to sleep at night. There's not much more to it than that. So forget about the fanfare, tune out the noise, concentrate on what drives your investment position, and that is usually your own life. So put those goals down, save for things in the long term. Don't mess around with your portfolio or your accounts while there is massive market dislocation like we're seeing right now.
Words of wisdom and relief that we all need. Jill Schlesinger, always great to see you. Thanks very much. For more on this, let's cross over to our CBS News senior White House correspondent, Weijia Jiang. Weijia, we know that often a White House will take credit when the economy is doing well, specifically the stock market, and then say the stock market has nothing to do with us when it tumbles. So what is this White House saying about this moment?
So the White House is basically saying that these numbers don't tell the story of what's actually happening in America. We have heard President Trump in recent weeks talk about his economic policies and how there might be a disturbance or an adjustment period or a little bit of time in order for those policies to be implemented. And so essentially the message is bear with us because we are making huge structural changes to the economy that are going to take time. They point to the investments that foreign companies are making. Coming here, for example, Japanese automaker Honda opening a plant here in the near future, or a huge semiconductor chips company out of Taiwan that's also decided to come here because they say they don't want to pay the tariffs that are expected. And so, Errol, the White House is saying that, yes, this is happening on Wall Street. They do acknowledge, his top aides, that the president pays attention to the numbers, but they say that's different from his priority, which they say is Main Street. So the problem with this, Errol, is that this is not what President Trump ran on. He didn't say, just give me a little time because I'm going to revamp the entire economy. He said, I'm going to come in on day one and lower prices, and we haven't seen that so far.
All right, we'll continue to watch all of this closely. Weijia Jiang, great to see you this morning, joining us from our DC bureau.